Hello friends, welcome to the Manthan series of BFM. As you know, in Manthan series we are covering all the subjects of CIIB, compulsory ones, all of them. I am covering BFM and ABM. So watch the series completely of all the mentors, watch it for all of them because we are covering the recollected questions and case studies and numericals, everything. Huh? So watch it completely. Subscribe to the channel, click on the bell icon. On this channel, JAIIB CAIIB English Medium, you will be getting all the recollected questions, the planners, how to do the studies, various subjects you will be getting. So both JAIIB and CAIIB, tell your friends also. Okay. Today I will be covering risk and basic risk management framework, module B. Okay. So let's start. Don't forget to like this video. Okay. Which of the following action can help a bank to satisfy its funding needs? So which of the action will help the bank to satisfy its funding needs? Think over it. To dispose of the liquid assets, to increase the short-term borrowings, to increase the capital funds and liabilities of term natures, and all of the above. Now what do you mean by this? See, every question in BFM requires some input. It's not only yes, no, not like this. BFM is a tough subject. Satisfy its funding needs. How do I get my fundings? Funds, money. Dispose of the liquid assets, whatever can be sold in times of distress, I'll sell it. So true. Increase the short-term borrowings. Why short-term borrowings? Why not long-term borrowings? Yeah, increase the short-term borrowings. Now, why do I increase the short-term borrowings? Because in short-term borrowings, the rate of interest is lesser. In short-term borrowings, always remember, the ROI will be lesser. Okay? So, this is also true. To increase the capital funds and liabilities of the term nature. Now, whatever I have to give it, see, capital funds and liabilities of the term nature means what? Whatever I have to give to the customer, deposits. The longer the deposits, the better it is for me. Right? For any bank, if the longer the deposits are there and at a lower rates, it is always better for me as a bank, isn't it? So, the answer is all of the above. Okay? Reserve Bank of India Act permits RBI to invest the reserves in the following types of instruments. So, RBI is allowed to invest. See, what do you mean by this? RBI is allowed to invest. Where will RBI invest? RBI will invest in, means which funds does RBI have? RBI has the funds from government and various banks, CRR, the CRR, SLR, whatever you are having, what is it? That is with RBI, isn't it? So where will RBI invest that? RBI gives dividends every year to the government. So deposits with the Bank of International Settlements and other central banks. So deposits with BIS, Bank for International Settlement. It is the bank in the world which is out of all the controls. It can transfer the funds anywhere. It is a bank of the RBIs, all the RBIs. Okay. Deposits with central commercial banks, foreign commercial banks. So RBI can invest with Citibank, HSBC, foreign banks also. Can they invest? Think over it. Debt instruments representing sovereign or sovereign guaranteed liability of not more than 10 years of residual maturity. So debt instruments, can they invest in debt instruments? Debt means what? Debt means loans. Okay, loans instruments. Can they invest in it? Yeah. So the answer is all of the above. All of them they can invest. RBI can invest in everything. Okay. Which of the following is a part of liquidity risk? Liquidity. Okay, liquidity means what? What do you mean by liquidity risk? The meaning of liquidity risk is running capital, running working capital. That is liquidity. If I face a problem in working capital, my whole business gets stopped. Isn't it? So that is working capital problem. So funding risk, time risk, call risk, and liquidation risk. So which of them is a part of this liquidity risk? Through which can I face the liquidity crunch? Crunch means I don't have money for immediate payments. Can I face it through funding risk? I don't receive the funds from wherever it's expected. Can I face the problem through time risk? Means I don't get the required EMIs on time. It can happen if the accounts are NPS, then I won't be getting the EMIs. So time risk. Call risk. Call risk means crystallization. Means what? The LCs and the bank guarantees which I have given. So they come for money. They come for cash payment. So that is called as call risk. There also I can face the cash crunch, liquidity problem, and liquidation. Liquidation means bankruptcy. So is it liquidation? So is the answer 1 to 3 all? 1 to 4 all? 1 and 2 and 1 and 3 only. So where do I face the liquidity risk? Many of you are typing this 1 to 4 all, but this is not the answer. Kindly note. 4 liquidation is not the part of liquidity. Kindly note this. Make the difference between liquidation and liquidity. Understand the difference. Liquidity problem arises every time to every organization. Let it be biggest one, let it be smallest one. Everyone will face the liquidity risk and the liquidity problem. Liquidation means what? You are not able to conduct your business and you go into bankruptcy. So that is different. Okay, that is different. So answer is 1 to 3 all, not 4th. Kindly note, 1 to 4 is not the answer, 1 to 3 is the answer. Which of the following statement is not true for RTGS? Not true. Kindly note, not true. Otherwise, you'll get out on the simple ball. Okay? Full toss, which you should make it 6, you'll get clean bowled. Why? Because you didn't read the question properly. Always in exam, read what is asked. Is it true is asked or is it false is asked? Is it correct one is asked? Is it wrong one is asked? You have to think and accordingly act. So here it's asked is not true. In RTGS, the transactions are processed continuously on a transaction by transaction basis throughout the day, T by T basis. That's called as gross settlement. What is the full form of RTGS? G is gross. Gross means T by T. Okay, T by T. So this is called as gross. The RTGS system is primarily meant for large value transactions. Obviously, no. That's why we have minimum 2 lakhs. Isn't it? Minimum 2 lakhs and maximum any limit. The minimum amount to be remitted through RTGS is 500 and maximum is 2 lakhs. Isn't it? What is this? So this is not true. Okay, this is false. This is the required answer. Reserve Bank has waived the processing charges levied by it for RTGS transactions. That is true. RBI does not charge any bank on any RTGS. Does not. Even any FT does not charge. So the answer is C. Not true. You wanted not true. Okay. Need to replace the net outflows due to unanticipated withdrawals or non-renewal of deposits is called as unanticipated withdrawals. Many withdrawals come into my branch. Why do many withdrawals come? There are many reasons. One is due to festive season also. There are certain festive seasons you have a lot of withdrawals. Okay, Diwali. Mainly in Diwali, you have a lot of withdrawals because cash is required. Nowadays the cash is being less used, but then also. Second reason, where can be the unanticipated withdrawals? If something bad comes about your bank in the newspaper or on the web portal, anywhere. Bad means this bank is facing this financial crunch, something. People get afraid. Oh, my money. They'll come for withdrawal. Non-renewal of deposits. What can be the reason for non-renewal? Many reasons can be there. Number one, your bank's deposit rates are very less. Competitor is giving very high. Number two, your bank is in a financial crunch. Common public knows it if it is. Then that can also be the reason. But what does this lead to? Need to replace the net outflow or net outflows due to unanticipated withdrawals and non-renewals is called as what? Strategic risk, embedded option risk, call risk and systemic risk. What is it called as? Yes? It is called as embedded option. Okay, embedded option risk. Whenever non-renewal of, see, customer, what is embedded option risk? Customer has a right to withdraw his deposit anytime, non-renew his deposit anytime, pay you the loan anytime. Customer can pay the loans anytime, isn't it? So this is known as embedded option risk. What are the remaining risks? Strategic risk. Strategic means what? Long term. Long term. Remember the Nokia phone? Nokia phone. Long term. Strategic risk. Where is Nokia phone today? Have you seen? How many of you have Nokia phones? Type yes. Gone. Why gone? Change. It did not change itself. Kodak company, Kodak photograph. There was a company 20-25 years back. Kodak, one of the top 10 companies in the world. Today zero. Net zero. Credit Suisse, biggest banks in the world. Zero. Strategic risk. Long term you don't see what is happening. Same thing is happening in many of the RBIs also, central banks. They are not, look at the debts of various Western countries. Strategic risk, huge. Call risk, crystallization risk means, what is call risk? Just now I think so I told you. I give you an LC or I give you a bank guarantee. I give you, means I am the issuer, means I am saying I will pay. And you actually come to me for payment. So what is that? That is a non-cash transaction, non-funded. Now it's getting converted to funded. So that is what? Replace call risk, isn't it? What is the systemic risk? Entire banking system failure. Entire system. Due to failure of one bank. Do you know this 2008 Lehman Brothers crisis? 2008 subprime crisis, USA. Lehman Brothers failed. All the banking system was in a collapse at that time, 2008. Many of you might be knowing this. Same thing was happening in 2021-22. Credit Suisse collapse. Silicon Valley, Credit Suisse, these banks collapsed. Same thing was happening, but it was prevented. Prevented means patched up. It's not prevented. It is ultimately going, UBS purchased Credit Suisse. Ultimately, UBS is also in a problem now. That's a separate aspect. So, systemic risk means what? Systemic risk means failure of entire banking system. Okay, entire banking system because of one bank failure. Okay, that is purchase and sale of bonds. Okay. So, systemic risk. So, the answer is embedded option risk. The prerequisite for establishment of an effective risk management system is existence of robust MIS. What does MIS stand for? So, prerequisite for establishment of effective risk management system is robust MIS. What does it stand for? This you had it in your JAIIB also. Management Information System, isn't it? MIS. Management Information System. Remaining all are okay. Manual integration, manual information, management integral system, forget it. Management Information System. Okay? Need to compensate non-receipt of expected inflows of funds is called as non-receipt of expected inflows. Where do you get this non-receipt of expected? What are the expected inflows first? Your EMIs. Okay? EMIs from the loans, and from the deposits you get the money. Depositor gives you the money that is used for giving the loans. So non-receipt, you don't get it. It's called as what? Funding risk, time risk, call risk, liquidation risk. Non-receipt of funds. Funding risk, isn't it? Time risk can be the answer, but time risk is when the question is framed differently. See, after all are same. All are related to liquidity risk only. Funding, time, gap, all these are related to liquidity only. But framing of the questions is different. How the question is framed, based on that the answer will be there. Time risk means what? If I don't get the required money or required inflow of funds at the time of giving a supply of funds, then it is called as what? Then it is time risk. Right? Gap risk. Also it's a part of liquidity only. Okay, call risk already I have explained. Liquidation already explained. Gap risk. That is also part of your liquidity risk only. If my gap means NII is not perfect, means it does not satisfy my expenses, then it's a gap risk, isn't it? The credit risk assessment exercise should be repeated. Now this already I have answered. It is biannually. Okay. It should be done biannually. Credit risk assessment should be done biannually. Let me see. So credit risk, I'll just change the answers. Okay. Which of the following is or are correct regarding the loan review officers? What is correct regarding the loan review officers? Loan review means what? Who does the audit of your systems? So what is correct? Read them. Yeah, he can be a fresher without any expert knowledge on credit appraisal. Can he be a fresher? Loan review officer. So that person is going to review your systems. Can he be a fresher? He should also be well versed with the relevant laws, regulations that affect lending activities. Well versed. Okay. Independence of loan review officer should be ensured. So what is the answer? A and C, B and C, A only, B only. What should be the answer? Can he be a fresher? Somebody is checking your systems and that person doesn't know anything. Fresher. He should be a well versed with the relevant laws and regulations. That is a basic requirement. Independence of LRO should be ensured. Independence means what? Otherwise what happens many times, this LRO, loan review officers, he is reporting to the manager and he is checking the systems of your manager only. Can you give the right answer? Suppose if you are reporting to your manager and you are checking his work, will you give him the right feedback? No. So independence should be ensured. B and C, isn't it? Okay. The crystallization of contingent liabilities and inability to undertake profitable business opportunities when available is called as what? Funding risk, time risk, call risk, liquidation risk. Crystallization of contingent liabilities. What is contingent liabilities? Contingent liability means LC bank guarantee which is non-funded. These are all non-funded. So LC bank guarantee is non-funded. So these are contingent liabilities. So crystallization of these LC bank guarantees, what do you mean by crystallization? They come for payment. The customer, see, what is this? I'll explain you. See, this is the bank. You might be wondering since long, what is this call risk? See, answer is call risk. Huh? Answer is call risk. You might be wondering, what is this call risk? I am explaining you 2-3 times, but image will speak 1,000 words. This is a bank. This bank has given guarantee. guarantee. Okay. On behalf of whom? On behalf of a customer A. This customer is, let's say, a road contractor. Road contractor. Okay. So it has given contractor. It has given a guarantee on behalf of A to, let's say, government, central government, let's say any government, state or central government. Now this contractor does not perform. He does not build the road well. So state government will do what? He'll ask for the payment. State government will come to you. You had given me the guarantee. Now road is not perfect. Give me the money. This is called as call risk or crystallization. Whenever the non-funded, see, earlier when I gave this guarantee, this was non-funded. Did I give any money? No, it was non-funded. When the government asks for payment, it is funded. So non-funded limit is converted to funded limit, isn't it? So that's the point. So the answer is call risk over here. Funding risk I have explained. Time risk. What is time risk? Just now I explained you in somewhere that the EMIs which come to me, which I can use it for payment to the depositors, they don't come at time, on time. NPS, time risk. Liquidation, already we have seen. Bankruptcy. Okay. Which of the following are issued for a tenure less than 91 days to meet the temporary cash requirements of the government? Meet the temporary less than 91 days. Commercial paper, cash management bill, T-bills and CDs, certificate of deposit. Temporary cash. See, important is temporary cash requirement. Think of it. The answer is say this. The answer is CMB, cash management bill. CMB is always less than 91 days. See, the tables I have made. CMB is always less than 91 days. From 91 days to 364 days, it is called as T-bills, treasury bills. Above 364 days, it's called as dated securities. Or government bonds, we call it. Bonds or dated securities. Ultimately, all are debts. All are loans. Loans taken by the government. This is for short-term nature, very short-term nature. This is for 1 year, means short-term. Very short-term and long-term, medium and long-term. Okay? So that is called as CMB, cash management bills. Okay? So now before going, let me show you the batches. Join the batches ASAP of Adda 24/7. Go to Adda 24/7. Okay, click on JAIIB and CAIIB. Click on JAIIB and CAIIB. Always go through the app. In the app, you will be getting 1% extra. Okay. Join the Increment Mahapack, CAIIB Increment Mahapack, one of the best Mahapacks for you. In this Mahapack, you will be getting ebooks and physical books, both. If you find strain on your eyes, see the physical books. If you are traveling, see the ebooks. 15 plus batches per subject. 15 plus. ABM 15 plus, BFM 15 plus, ABFM 15 plus, BRBL 15 plus. 15 plus. So that many times revision you can have just by attending the classes. Why to read anything else? In 15 batches, you can definitely cover the whole portion. Plus double validity right now. You buy for 8 months, you get it for 16 months. You buy for 12 months, you get it for 24 months. Plus 81% discount. For that, use the code Y432. Say this. Y432. Say this. 80% discount plus 1% extra through the app plus double validity plus 15 plus batches.